What's up, it's Kyle again. Just uploading some videos to YouTube as I normally do. Anyways, going to talk today about investing. Second video on investing. As you can see here, S&P was up 0.16%. My stocks for the day, Saturday, so it's going to show zero, but it was up quite a bit. Anyways, I was just going to show y'all some stocks that I own. Here's a page of stocks that I own. Here's my most recently bought stocks right there. I had to transfer to buy these funds, but we've got VU, which is a composite of the 500 index by Vanguard, obviously, and it keeps up with the S&P 500, so it's a composite of the S&P 500. We've got some emerging market shares here. Got some pharmaceutical, some financial industry banks. This specific bank is big with Walmart credit cards. They lend to Walmart credit cards. Stage Stores Incorporated. That's going to be your Bells, your Goodies, and some other stores. Stage Stores Incorporated. This company is this is an ADR. This is a some sort of foreign stock. Let me do the research here. Trying to remember what it was exactly. Oh yeah, this was one of my France investments, pharmaceutical company based in France. I wanted to get some Brexit stocks in, and projected growth 7.38%, not bad. But as you can see, over the year, they're down. I bought around here, but you can see they're down. Go back to that here in a second. Yeah, so that's pharmaceutical companies. A lot of pharmaceutical companies out there. So that's what that is. ULG Holding Corp. They, if y'all have heard of 21st Century Real Estate Investments or whatnot, they're a real estate company, and for $32 or whatever I paid per share, 32 with the trade value or whatever, not bad. 5 shares. Bankrate, they're a company I bought a little bit ago. They're down, but whatever. You get some, you lose some. Coca-Cola, I've seen that up 20 something and down, and whatever. JCPenney company, I bought them at a high price, but I really wanted them, so I went and bought it. Industrial and Commercial Bank, they're a freaking huge bank in China, so they're like the largest or the second largest bank in China, and so I just have they're an ADR, I believe. But, HSBC Holding Corp. It's also financial. HSBC is a bank. Harmony Gold, or gold mining. Hollyfront Corp is they like what is it? I forget. They burn gas, or they burn oil to make the gas, so they're a refinery company. General Motors, I had a lot of their stock and I sold it because I really wasn't liking them. But I kind of wish I didn't, but I did, and I invested in other things, and I'm glad I did. But I'm looking for long-term. Geo Group, they're a private prison system. They do governmental contracting. Fortress Trans. I don't remember what they do. I think they yeah, they're like I believe a transportation company. 21st Century Stock. Some of these stocks I bought when I first started investing, I didn't really do the research. I just bought them because other big investors bought them. And I would have definitely gone with Warner Brothers if you're trying to get in entertainment industries. Warner Brothers, that's not what I did, obviously, this 21st. But I'm just going to keep them. All these are long term. So, whatever. 21st Century Fox is good, but Warner Brothers, I think, has better name recognition. They're also in more of the music industry as well as the music, or the the movie making, motion picture films, things like that. BNP Paribas Bank, I owned them long before the Brexit. I think these guys are going to go up quite a bit, and they're a British bank or whatever. So I just invest in them because I want to have a piece of that market, So Bear Clay is another, that's an ADR, as you can see here. Another foreign bank, Bank of America. I like Bank of America, and they're a good company. Alon USA Partners, another refinery company. And then ABBVI Inc., which is a pharmaceutical company. So let's see, going back to that Santa Fe or whatever, the Brexit pharmaceutical company. See, as you can see, this is a max year from 2002 all the way up. See, so they're growing, but it comes in, and goes back down. As you can see, it's kind of the trend here. So always look at the trends and the volume when people are buying and selling shares, and see a little spurt of growth here. It's not a lot, but you can see people sold here, and then it kind of went down, and then people bought back up. And obviously there's some shares, and people were buying here, sold a little bit, bought, sold. But the people who sold here, as you can see, the volume was not that high, so it relatively had a very small effect. And as you can see here, there's a lot of buying, so I predict that this will go back up. Although you never can tell. You have to do the research with, their accounting, basically what their profits are, how good they manage their money, things like that, long-term, short-term debts. So, anyways, I hope that helped y'all. As you can see here, my long-term gain loss is 22. My short-term's 68, whatever. That's not entirely accurate because I bought and sold between all these, so I have some capital gains that I've made that you can't see here, but overall I've made, including that, some money. But like I said, I'm not really interested in these reds right here. And if you're a long-term investor, you're not going to really be interested in the reds. I mean, it's just a chance for it to make more money, I guess, but, if it goes down to like a penny or something, yeah, that should be a red flag, but, overall, it should be pretty good. So those are, and just keep in mind that each one of these trades cost me basically $7. So you multiply that by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 24. Basically, I spent $168 doing all these trades, which even with that and this, realized game, I've still made money. So, there's a cost of doing business. Yeah, I wish it was shorter or less or whatever, and I wish I got some free trades, but last Friday I beat the S&P by like, I don't know, quadruple. I was up like 0.7 some percent. S&P was up 0.16. So, I try to keep a good eye out and own direct stocks versus mutual funds. This is the only mutual fund I own, and its expense ratio is so small that it's really amazing, and I want a piece of the S&P market, which is this market right here. You can't invest directly in the S&P 500 that I know of, so you have to buy composite stocks that basically buy the same percentage of the S&P, how it's calculated. And all these are good. Dow's good, Nasdaq's good, but the S&P, based on what I've read and researched, and Warren Buffett says this is the overall indicator on how the U.S. market's doing. Nasdaq's more of the digital market and this and that, and they're less restrictive than the S&P, and then the Dow obviously is nationally acclaimed, and long term I like to have a piece of all these markets, as well as the Wilshire 5000. But for now, I'll just keep buying individual stocks, and I have a whole freaking list of stocks here too. Oh my gosh. That I want to eventually accumulate. The good thing love about Merrill Edge, it's obviously they're open 24/7. You can always call them, ask them questions, this, and that. But also, they have great investing tools. They've got screeners, which are good, but I don't use them a whole lot because I don't know. It just seems kind of complicated to me versus just doing a Google search and this and that. Now, if I really want to, if I find a good company that I want to do research on, then I'll use the platform, put in their ticker symbol, and then do the research there. And they've got like the Morningstar and the S&P indexes and research firms that you can go and read, and it gives you a list of, you know, basically a very in-depth review of their business and how the people that work for these companies rate. So as you can see, I've got index of strong buy. Some of these are really old too, and when I mean really old, I mean like less than a year. This was my original one. Then I have this one that I had some lists that I really wanted to buy, and this one's kind of my revised, like strong buys and indexes that I really wanted to have a piece of the market in. As far as, you know, and then I have a limit order set on this company here. I just don't have enough money I don't have enough money to invest in this right now. With me being conservative with my money. But yeah, I have this as a limit order. If I bought this company at this price, I would definitely buy it. 333, I would make the sacrifice because that is just an amazing buy right now. But as you can see, it's trading in $40 ranges. So, you know, I bought a whole bunch of stocks instead of limit order, and but this is like a solar company, but they do other stuff too. But mainly they do solar stuff. Now here are some stocks that if it says right here, that means I have it. This little star means that I have shares in those. Great company would be Visa, PayPal, eBay right here, Facebook, also another good company, GNC Holdings. They're good. I don't really shop there, but they are in the health market, and I really like that. Intel Corp, if you don't know Intel, great company. I want to buy some shares on that. They're trading at kind of a high right now. As you can see, their 52-week high is 35.93, and they're trading at 34. So you know, I can just wait till it goes down, because it's not more than a few months ago. It was near its lows. I just wasn't really trading them. Korea Fund, man, that's a piece that I really want. You're gonna get your Samsung and some other stuff in there, and you know, if I was a day trader, you know, I think I could make a lot of money. But I'm not really a day trader type of guy. You know, yeah, it's good to have a piece of the market in day trading, but for my platform, it's not profitable, really. But got your LPL displays. This is a LG company, which they're the second. As of 2016, they're the second producer of OLED technology. Samsung's the first, and Samsung's going to be in the Korea Fund because they don't offer direct ADR in the United States market. LG. So, I mean, you know, these are two great companies that I wish that I had a piece of, but eventually, obviously PayPal. It's like Visa is always going to make their money. They do like a lot of transactions, so unless they're just retarded, which they're not, they're going to be making money. If you go out and buy groceries with a credit card or a debit card and it has Visa on it, they're getting a little bit of that. So, anyways, yeah, that's kind of some companies that I've been watching and this and that, and then there's another watch list, Cisco, and you know, Whole Foods, Solar City Company, and a bunch of the other same ones, but I just really narrowed down the ones that I really wanted on other ones. Other on the index of strong buy versus the just the buy, and I just kind of do research and figure out what's good. So great company, as you can see. Bank of America is projecting a 48.01% increase, which is really unheard of. I really wish I had this company because, as you can see, just for the year, they've been growing like crazy. And they have a market cap of 1.61 billion. They've got 39 million shares, 30 almost 40 million shares outstanding. So they don't have a lot of outstanding shares, and they have a fairly high market cap, which it looks like in total they have about 2 billion shares allocated out there, which is always split up and add more, but they're definitely a good company. So Advanced Energy, Climate Subsystems, Power Supplies, Flat Panel OEMs, Semiconductor segment accounts for major portion of the company's revenue, followed by flat panel advancement products, data storage aids project. Primarily deal with power management. Aka solar power. So they're up from the S&P Capital IQ, so to 4 stars rather than 3. Their report's pretty good, as you can see here. So, anyways, there's just whenever you first start investing, you can be overwhelmed with the information because there's so much information out there. The key things that I would say: how much they're bringing in, how much they're spending, how much they have in debt, and long-term, short-term debt, things like that. So, anyways, that's the video. So, thank you.